Good morning, everyone. Welcome back to ET Now, your market cafe with me, Kanishka Sarkar and Shreyansi Singh. Over the next 1 hour, we'll get you top developments from India and around the world and also tell you about the stocks to keep on your radar today. Well, all eyes today will be on RBI's policy decision. But before we get to what is expected on that front, let's first get you some quick US market updates, especially as Donald Trump's tariffs are set to take effect today. Now, Shreyansi, looks like Wall Street saw declines again as US is forging ahead with 104% tariffs on China.
Absolutely, you do have that anxiety coming in on the back of tariffs and all the announcements, in fact, that have been made when it comes to tariffs, and that is something that has really just fueled this 4-day rout that we've seen as far as stocks are concerned. The volatility is something that we're seeing still continue at this point. S&P 500 was up more than 4% at one point before ending the day with a loss of 1.6% thereabouts. So that's the kind of move that you're looking at. That's the kind of volatility that you have at hand when it comes to the S&P 500, but also the larger market as well. When you take a look at the 30 stock Dow as well, that's the one that climbed 3.9% at its high for the day, ultimately fell 0.8% at the end of trading. And when you take a look at the broad market index, nearly 19% off its record high as well. So that's the kind of move that you're looking at for the broad market index as well. Now, over the course of 4 days, you do have the Dow that has lost over 4,500 points. So that's the move that you have. S&P 500 sustained a 12% loss, in fact, coming in, and Nasdaq Composite also down more than 13% in that period. So double-digit losses coming in for both of these indices over the course of just 4 days. We've seen quite the rout come in on the back of some commentary coming in from Trump about the tariffs as well as the tariff announcement. You do have tech giant Apple that has also suffered keenly in that period as well, because you do have that iPhone manufacturer expected to see higher costs with incoming China tariffs. So that's also something that we're looking at in terms of stocks. And investors could also be in for another roller coaster ride, as you do have a raft of tariffs like we've talked about earlier that take effect on Wednesday just after midnight. And these duties, in fact, very important to note, also include an anticipated 104% levy on Chinese imports as well, like Kanishka mentioned. So definitely something that we're looking at, Kanishka. But speaking of what we're looking at, you do have the crude sell-off that is also continuing at this point.
Absolutely. Now, moving on, crude sell-off also continues amid fears of a full-blown trade war between US and China, the world's biggest economies. Now, yesterday, US crude oil closed below $60 per barrel. This is the lowest level in 4 years, as traders fear that US President Donald Trump's sweeping tariffs will trigger a full-blown global trade war. Now, US crude oil lost nearly 2% to close at $59 per barrel, the lowest level since April 2021. Brent, on the other hand, fell more than 2% to settle at $62 per barrel. Now, oil prices are now down more than 15% since last Wednesday, when Trump announced the new round of import taxes. This downtrend comes as oil market stares at recession fears due to Trump's tariffs and the decision by OPEC Plus to bring more barrels back to the market. Also, remember, as per the White House officials, the US will impose a 104% tariff on China from 9:30 a.m. India time today. Now, this adds 50% more to tariffs after Beijing failed to lift its retaliatory tariffs on US goods by a noon deadline on Tuesday that was set by Trump. Now, looking at the outlook going forward, Goldman Sachs has forecast that Brent and WTI crude prices would be at $62 and $58 a barrel by December 2025, and at $55 and $51 a barrel a year after that, are under different scenarios. Meanwhile, official weekly oil inventory data from Energy Information Administration is expected later in the day. Let's also take a look at gold, which pared earlier gains on Tuesday as US Treasuries yield rose, although a weak dollar and escalating trade tensions between US and China underpinned prices. Well, after rising over 1% earlier in the session, spot gold was up 0.1% at $2,984 an ounce. US gold futures settled 0.5% higher at $2,990. Remember, recession fears following Trump's reciprocal tariff announcements have prompted investors to take refuge in the safe haven assets like gold.
Absolutely, that's something that we're looking at as far as gold is concerned. But you do have safe haven demand also taking a little bit of a breather. Even that is not managing to really perk up gold when you take a look at the levels coming in as far as gold is concerned. And when it comes to oil, it's really just energy demand concerns, global energy demand concerns that are still in the spotlight. But moving on, then let's take a look at the events that you should be watching out for. From India, of course, you do have the MPC rate outcome, and that's the one that we're watching out for. From the US, there's FOMC minutes, as well as wholesale inventories, definitely something that we're looking at. And other than that, in terms of Zomato, you do have the company rebranding to Eternal on stock exchanges, so even that particular counter is going to be in the spotlight. And speaking of other events, then you do have Richmond Fed President Tom Barkin who's going to be speaking, so definitely something that we're keeping an eye on, Kanishka.
Moving on, let's get you some global stories. Well, America's trade war enters a new chapter. US Customs will begin collecting fresh tariffs from 86 countries, including a staggering 104% duty on Chinese imports in just a couple of hours. Now, after China rejected US blackmail and both parties refused to back down, Trump announced that he would double tariffs on the biggest manufacturing capital of the world. Trump, however, still left the door ajar for Beijing to reconcile. In a post on social media platform Truth, he wrote, and I quote, "China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their call." End quote.
Moving on, even as the White House scrambles to begin trade talks with allies like South Korea, Japan and Italy, the administration insists country-specific tariffs, some as high as 50%, are rolling out on time. Trump, in fact, has said that every country wants a deal, but also admits that we can't see that many that fast since every deal will be tailored to individual countries. Let's go across and listen in to what exactly he then had to say.
The tariffs, you've been hearing about tariffs. We're taking in almost $2 billion a day in tariffs. $2 billion a day. And we're doing very well. And we're doing very well in making, I call them tailored deals, not off the rack. These are tailored, highly tailored deals. Right now, Japan is flying here to make a deal. South Korea is flying here to make a deal, and others are flying here. I mean, my only problem is I'm not sure I have enough. We're going to have to use those great law firms, I think, to help us with that.
Moving on, Canada is also firing back. Prime Minister Mark Carney has announced a 25% tariff on US vehicles, calling Washington's trade moves unjustified and misguided. Though Trump spared Canada from fresh levies this week, tariffs on Canadian steel, aluminium and vehicles remain, prompting Carney's swift retaliation. Now, only US vehicles that violate the Continental Free Trade Deal will be taxed, and auto parts are excluded from this deal.
Moving on, war of words continues between the two nations as US Treasury Secretary Scott Bessent warns that China made a big mistake in the trade war by imposing 34% retaliatory tariffs against the US. In fact, in an interview, he also added that the US holds leverage in this partnership, also expects more countries to join negotiations, putting the blame entirely on China.
Next up, the big tech crown has shifted once again. After a brutal 4-day sell-off, Apple has lost almost 1/4 of its value, putting Microsoft back on the top as the world's most valuable listed company. Apple's China exposure is making it a prime casualty of Trump's sweeping new tariffs. And the UBS has warned that iPhone 16 Pro Max could cost $350 more in the US.
Moving on, the Justice Department has shut down its cryptocurrency investing fraud unit with immediate effect. This comes after the Trump administration ramps up its embrace of the emerging digital currency market. And you do have Deputy Attorney General, in fact, who's also ordered prosecutors to pivot to investigating transnational criminal organizations as well as terrorist groups that use crypto to engage in illicit transactions.
Moving on, another collateral damage to US's trade war. TSMC is staring at a potential $1 billion penalty from a probe into whether it violated export controls by making chips that ended up powering Huawei's high-end AI processors. Now, according to reports, TSMC built nearly 3 million chips for a China-based major, and because the company uses US tech in its Taiwan fabs, it falls under US export rules. Moreover, Trump tells TSMC that pat 100% tax if it didn't build its plants in the US.
Moving on, Union Minister of Commerce and Industry Piyush Goyal emphasized on the bilateral trade deal between India and the US amid the tariff environment. Also said that engagement with US is going well. Let's go across and listen in.
Working on a bilateral trade agreement as was decided between Prime Minister Modi and President Trump in February. We have had a series of engagements. All of them are going well in the right direction. Obviously, we are covering a very wide array of subjects, a very wide array of products, and I can assure business persons across the country that we are keeping the best interests of India at the forefront of our discussions. India first is our mantra, is our guiding principle, and our bilateral trade agreement with the United States of America will power the economy towards Viksit Bharat 2047.
Well, that's the word coming in from the Commerce Minister. With that, it's time to take a very short break. We'll be right back on Market Cafe. Stay tuned. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Shreyansi Singh. Well, now it's time to get you some news updates on the domestic front. Well, Commerce and Industry Minister Piyush Goyal is likely to meet exporters and industry today, mainly to get a feedback and a brief brief exporters on how 26% reciprocal tariffs by the US are going to go forward. Now, issues related to the impact of the tariffs, export order pipeline, and expediting the bilateral trade agreement are some of the talks that will be on agenda today. Now, the government has already said that they are doing everything possible to help exporters. ET Now's Sumit Chaturvedi joins in with more details.
Commerce Minister of India Piyush Goyal is going to hold a very important meeting with exporters today. The important meeting comes at a time when reciprocal tariffs from US have been announced. They are coming into effect from April 9 today only, and that's why exporters are in a way want to know what is the plan of overall Indian government going to be, what is their feeling, what are they thinking. That's why this meeting between Piyush Goyal, Commerce Minister, and exporters is important. Remember, the tariffs are on many goods, even including pharma, and its effect was already felt when the tariffs were announced. Now, exporters, they have asked for certain incentives also from the government side. On the other hand, government is of the view that they are ready to extend all possible help to exporters, and they also want to know from their side what should be the feedback when it comes to signing a bilateral trade agreement with the US is concerned. Remember, US and India are engaged in talks as far as BTA is concerned. It is to be sealed by the fall of this year, and Indian exporters' feedback on that will be very important. So today's meeting assumes significance in the light of all these problems being faced by exporters from different sectors, including auto parts, gems, jewelries, and other sectors.
Thanks, Sumit, for getting us that update coming as far as the tariff setback then is concerned. But moving on, all eyes are going to be on the outcome of the two-day monetary policy, where another 25 basis point rate cut is largely being penciled in. In fact, let me go across to Gaurav, who's standing by to tell us what is being expected. A 90% possibility is what analysts are estimating when it comes to the 25 basis point rate cut, Gaurav?
Well, yes. Trump tariff is already causing turbulence in the market, but other than that, specifically in terms of India, we will be watching out on the RBI MPC meeting's outcome, because now around 90% of the surveyed economists believe that around 25 basis point of rate cut is what we can see in this meeting as well. With this, RBI's the overall repo rate will go to around 6%, and there are two reasons why economists believe that. First is when we talk about inflation, now they believe that inflation is going to ease down. In fact, the inflation, which was as high as more than 6%, is expected to come as low as around 3.6%, which is the lowest in the last 5 years. Other than that, when we talk about IIP data, we are seeing some kind of slowdown because it is expected to grow at around 3.2% in the month of February. Other than that, what is key thing to watch out for is the RBI stance, because currently RBI holds neutral stance, but some economists believe that RBI will go ahead and change their stance to accommodative, while at the same time others believe that it will be really too early to go to and change the stance. And the reason being that it is currently at a trade war situation when we talk about tariff which are imposed by Mr. Trump, and that is the reason why they believe that RBI will still remain cautious. Other than that, any kind of commentary from RBI in terms of how the growth is going to be is a key thing to watch out for, because at this moment when we talk about India's growth rate, RBI believes that India can grow at a rate of around 6.7% in terms of GDP in FY26. So any kind of change in estimate is something to be watched out for, and any kind of changes in terms of the stance from RBI, and at the same time any kind of changes in terms of the commentary coming up from the global trades which are happening is a key thing to watch out for. But as of now, around 90% economists believe that we will see another rate cut in this meeting of MPC.
Thank you, Gaurav, for getting us that snapshot of what all to expect from the RBI commentary going ahead into the day. Now, moving on, FY25 GDP is likely to have a 30 to 60 basis point downside, according to Upasana Chachra, the chief India economist at Morgan Stanley. Now, listen in to what else she had to say about Morgan Stanley's GDP estimates and the potential tariff impact.
Our base case has been 6.5% for growth for fiscal 26, but we see downsides of about 30 to 60 basis points to this number. The direct impact for India in terms of the trade exposure is lower when you look at it versus some of the other Asian economies. Inflation, I think, is sort of a good news for India and a silver lining. Inflation numbers have been better than expected in this year or the last three sort of odd readings that we've got. We do think March would also be below 4% and probably the next few months as well. Our current number for fiscal 26 on inflation is at 4%, averaging with a good part of CY25 sort of remaining below the 4% mark, driven by easing food inflation. So I think inflation by itself does open up the room for RBI to react and respond. If they were not to do that, then real rates would expand. And then in this context of increasing external risks, of course, that has its own adverse impact on the growth trajectory.
Rather than moving on, Indian exports of iPhones crossed 1.5 lakh crore in financial year 25, and that's the word in fact coming in from IT Minister Ashwini Vaishnav. He also adds that electronics manufacturing in the country has increased over 5 times and export over 6 times in just the last 10 years. In fact, he was speaking at a briefing on the recently announced components manufacturing scheme and the notification for which happened yesterday as well. Let's go across and listen into what Ashwini Vaishnav then had to say.
इसमें स्मार्टफोन के एक्सपोर्ट्स 2 लाख करोड़ रुपए से ज़्यादा हुए हैं, जो कि पिछले फाइनेंशियल ईयर से 54% ज़्यादा है। आईफोन के एक्सपोर्ट्स 1.5 लाख करोड़ से ज़्यादा के हुए हैं। तो ये एक देश में बहुत बड़ी ताकत बनी है। करीब 25 लाख लोगों को इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग में रोजगार मिला है, और ये 10 वर्षों पहले तक सोचा भी नहीं जा सकता था। वो काम मोदी जी के इन 10 वर्षों में हुआ है। थर्ड फेज ऑफ आवर ग्रोथ, वी स्टार्टेड विद just the finished goods, then the sub-assemblies, and now the components. And what we are announcing is basically a horizontal scheme, in the sense that electronics components which will be supported under this scheme will go into consumer electronics, medical electronics, power electronics, automobiles, in electrical grids, in practically every component it will go, which means this will give a big boost to many sectors. This will have a multiplier impact for many sectors.
That's the word coming in from the IT minister. Now moving on, With the onset of summer season, South Korean electronics giant Samsung aims to register a double-digit growth for its AC vertical. Now, in addition, the brand also understands that the reciprocal tariffs imposed won't have much impact as the company is primarily focusing on meeting the domestic demand and foresees a lesser impact on exports. ET Now's Sameer Dikshit exclusively spoke to Gufran Alam, the VP Digital Appliances of Samsung India. Let's listen into that excerpt of the conversation.
Actually, we see a quite strong growth this year. In fact, for the last 5 years, we are seeing that AC industry is growing in double digit. And we see the same kind of growth. Our internal estimates say that it will be around 20 to 23% growth overall industry.
In addition to this, there has been industry concern of the rising prices of the raw material, which has led to a bit of price hike in the first 3 months by multiple players, by the stakeholders. You as a important stakeholder, are you looking to come up with a price hike going forward because of these concerns?
So we are seeing some raw material price increase, and we are looking into it and observing this trend. And we will take decisions accordingly.
So basically you're suggesting that domestic demand ko you want to cater first and then for exports?
So we are looking at the demand in the domestic industry, and we are ready and geared up to fulfill that.
It's time for a very quick breather on the show. When we come back, more news and updates on the other side, so see you then. Welcome back. You're watching Market Cafe on ET Now, and it's time now to get to the futures and options roundup. In fact, Ansh is standing by with just that. Ansh, over to you.
So in the previous session, Nifty showed very good recovery. Actually, if you see on chart, the Nifty recovered almost 50% of that Monday's gap down. That Monday's range was around 22,850 to 22,250, and we can expect the consolidation happening within this range. If we talk about index options, then today we have weekly option expiry, so one can expect a good volatility in the market. We are seeing very good put writing happening directly at 22,200 mark. So if we see a dip today, then this is the level where we can face some good buying pressure. If we talk about Nifty Bank, the Nifty Bank has actually come back above that 100 DMA, indicating some positivity, but it is facing very strong resistance at that lower bound of that consolidation pattern, which is around 50,800. So unless and until we don't get back above that 50,800, one can expect some sideways to some negativity around this level. Also, if we talk about index future, then there we are seeing some short covering happening with open interest going down by around 4.5%. Let's also talk about index futures. So in the previous session, FI actually covered their long by almost 3,000 contract. At the same time, they covered some short as well by around 1,400 contract. But net to net basis, we are seeing it going down by around 1,500 contract, due to which the total long position has slipped lower, back below the 25% to 24.3%. At the same time, if you talk about retail, then even they have covered their long position by around 2,500 contract. They have added some shorts, due to which the total long position is 57.2%. So both FI and retail seems to be getting a bit cautious in the market in the previous session.
Well, before we let you go, Ansh, the IT bellwether TCS is all set to kickstart Q4 earnings. The IT major is likely to report a muted set of numbers with BSNL ramp down denting growth. Why don't you give us a lowdown of what the street is expecting?
Well, TCS is expected to report a soft quarter with modest growth. In dollar terms, we are seeing that revenue is estimated at $7,489 million, down by around 0.7% sequentially. Now, the dip is mainly due to ramp down in BSNL deal and fewer working days in the quarter. However, in rupee terms, we are seeing that revenue is expected to rise by around 1.4% to 64,856 crore, whereas EBIT is likely to come in at 16,123 crore, showing a 3% increase sequentially. Also on margin basis, we are seeing some good improvement. They may expand by around 40 basis points to 24.9%, and this would be mainly supported by improved operational efficiency and reduced contribution from BSNL deal. Lastly, net profit is projected to be at 12,650 crore, which is up by around 2.2% on quarter-on-quarter basis. Apart from this, there are 5 other key things to watch out for. First is management commentary on demand environment. Second is total contract value of deal wins. Third is trends in headcount and attrition. Fourth is updates on Gen AI updates. And fifth is growth outlook in US and European market, because these two regions contribute to nearly 80% of the total revenue.
Absolutely, Ansh. Thank you so much for getting us that roundup when it comes to TCS then. But moving on then, in terms of the market, let's zoom out, take a look at the market because yesterday we managed to shut shop above 22,500 levels. Currently, what is being penciled in is a gap down open coming in. And let's also zoom in on top voices weighing in on Trump's tariff policies that have led to this sort of slide that we've seen come in as far as global markets are concerned and even markets back home. Sandeep Tandon, in fact, warns of inflation's comeback and a Nasdaq that's yet to bottom out. You do have N. Jayakumar also seeing demand destruction ahead, while you do also have Taimur Baig sounding the alarm when it comes to stagflation. Let's go across and listen in to what the experts had to say.
US market has still not bottomed out, and particularly Nasdaq has not bottomed. So anything related to technology basket or the which is sentiment linked with the US market should be over 3 years, 5 years perspective. Then trajectory for dollar index is clearly down. I think dollar index either has already peaked out or has potential to peak out in 2025 itself. But if I have to look at from a very near-term perspective, despite that DXY has corrected yesterday, I still believe DXY and global yields, what we have to watch very closely. It has potential to spike from the current level because when nobody expects that, and that's the time reversal happens.
To the extent that specific sectors have been exempted, it clearly shows the shortages that exist in those products, in those sectors. Whether it's pharmaceuticals or minerals or any of these, the US is in serious short supply. And there could be a lot more damaging impact it could have done had tariffs been imposed on these. At the very least, it could have been disrupted, already is, by the way, for the average US consumer. I think India will be a big beneficiary of money coming back into these markets. And in that, the sectors like pharmaceuticals and to that extent, even IT services will actually stand out.
Probably see, starting with the US, inflation tick up. Already there are signs of producers looking at input and output prices and saying that their input prices are rising and therefore they'll have to push on some prices. Already we're beginning to see some degree of tightness around the immigration measures pushing up home construction prices. Assuming the Fed can do what the Fed wants to do, not what Trump wants them to do, then the Fed is going to be very likely to remain on the sideline, but perhaps start doing significant tapering of quantitative tightening because in times like this, there is significant additional need for liquidity globally and of course in the US.
While these tariffs are a big sentiment dampener as far as the whole world is concerned, as far as India is concerned, I'm more worried about the result season and the consequent earnings downgrades, earnings estimate downgrade that most of the sectors are likely to suffer. You will see bilateral and multilateral trade agreements within the Asian bloc, maybe, the India-China trade agreements, which have, kind of long been postponed, long been on a back burner. They would actually, possibly improve.
Well, that's the word coming in from experts as far as the tariff impact is concerned. Now, moving on, 3P investment managers Prashant Jain believes that higher earnings growth needn't lead to higher returns. He also shares that his earnings outlook on various sectors. Let's listen in.
Is that higher earnings growth need not lead to higher returns, as we have seen time and again. So if you go back 5 years, utilities were deeply undervalued. What has been the earnings growth? Very low, below market probably. But returns have been extremely high. Similarly, you have sectors, let's say some companies in consumer, which have grown earnings ahead of markets, but the stocks have not done well. So I think as long as you don't extrapolate earnings growth to stock market returns, it is okay. So I feel, the dispersion in earnings in this market is going to be extremely low because the most sectors are making reasonable margins. Still, I feel banks, insurance companies, they should grow earnings maybe slightly ahead of markets. Telecom could grow earnings slightly ahead of markets. Even capital spending, I think, will grow ahead of GDP. The IT, the near-term outlook is mixed. In pharmaceuticals, it is more individual company-led. In consumer, I think mid to high single-digit earnings growth should happen. In automobiles, I think there will be greater volatility year to year because it's an asset which people buy and demand tends to vary year to year. But longer term, I think even automobiles should grow in line with the aggregate earnings in here. Yes.
Now let's look at a pocket where you think the earnings growth will not be there. You think either it's going to be lower or it will get much more lower going forward.
See, in commodities, for example, if metal prices fall, if oil prices fall, earnings could obviously get impacted. But I think markets appreciate that aspect of this sector. But I would say, in cement, if prices go down, you may not have earnings growth. In automobiles, if in a particular quarter or a particular year, demand is weaker, you may not get earnings growth. You may actually even get a degrowth because if volumes are not there. So I think there could be some pockets where earnings growth is not there, but overall, I think we are quite well placed.
Okay. Prashant Jain believes in one thing: buy cheap, sasta, sundar, tikau. What is cheap in this market? Where is value in the market?
So, fortunately or unfortunately, there is, to my mind, no outlier value in this market. And we have been saying that for a long time. There are sectors like consumer or small mid caps, which I think are still meaningfully expensive. And over time, they should correct. This is my opinion. But if you start looking for deep value, I don't think there is deep value in this market anywhere. The dispersion in valuations. So we did an exercise. We said, let's look at 15-year average valuations because 15-year captures roughly 2 cycles and compare the current multiples relative to that. So there is no sector which is trading at a discount to 15-year multiples. And the premiums are also confined to just 2 sectors. I think it is capital goods and consumer discretionary. I think this is a market where it would make sense to run a fairly diversified portfolio because dispersion in valuations is actually quite low.
I like to shift attention to something very specific, which is utilities. And you've gone on record that you liked power stocks in the past. And everyone knows that this time गर्मी ज़्यादा पड़ेगी. गर्मी ज़्यादा, AC ज़्यादा. AC ज़्यादा, बिजली की demand ज़्यादा. Should one now start should one start looking at some of the utilities and some of the so-called power and these safe stocks now because interest rates will come down, demand will be high, and in this volatile environment, power पे तो tariff नहीं आने वाला.
Nitin, you are right that this sector presents growth opportunities to India, and it's, as I said, our AC penetration is hardly maybe 4-5%. So our per capita power consumption is a fraction of the world. So as incomes grow, power demand in India should continue to grow. Now the key is how are you? So growth outlook is fairly steady. It is moderate, but it is fairly steady. It is de-risked. But the key is what are you paying for that? So there, I think the variation in valuations across utilities is quite high. So I think it is mainly a bottom-up approach that one will have to adopt in this sector. I don't think this sector is as cheap as it was 3, 4, 5 years back when it was impacted by either the some tariffs were cut in COVID, which impacted these companies, or because PSUs were out of favor, or because of the ESG challenges. So I think these stocks, again, to my mind, are reasonably valued, and one should expect close to market or maybe slightly ahead returns, but it would be more stock specific.
Rather than there you have it, that's some key commentary coming in as far as the tariff storm is concerned that we managed to weather yesterday. It doesn't look like.
And also, Brent crude is hovering around $60, so that's positive for this company. Keep an eye on them. Vedanta, keep an eye on this stock because the company has said that it is considering trimming its proposed demerger into 4 units. First, earlier it was planned to demerge into 6 units, and this is after a corporate tribunal blocked the spin-off of its power business. So that's the reason now the company would split the overall business into 4 units. Phoenix Mill, the company has given its quarter 4 update wherein the consumption across all the operational malls is up by around 15% on a year-on-year basis, so that's good. GAIL, the company has incorporated a subsidiary in International Finance Services Center at Gujarat Gift City. Cochin Shipyard, the company has done a MOU with Dry Docks World. This is to enable development of ship repairs cluster and synergizing mutual strengths between the two companies. And keep an eye on BPCL as well, because the company and Sembcorp, they have entered into a joint venture agreement to explore renewable energy and green hydrogen projects across India. The company has earlier highlighted about this in the month of September, and now finally they have done the agreement.
Thank you, Varun, for that list of stocks to keep on our radar today. With that, we are completely timed out on this edition of Market Cafe. But stay tuned as the market takes all the action forward.